So you want to buy a home and you're unsure of if the market is the right time right now. How do you figure out if it is the right time to buy? If I'm interested in buying a home and I'm looking at the market as it stands, first I'm going to start off with where we're at. So here's what we know. So we know that as far as supply goes, that an average amount of homes being listed in an average market is about 23,000 to say 25,000 homes on the market. Now, right now, we are at about 12 to 14,000 homes listed on the market. So that would tell us that supply is low. We'll just use this as our supply marker right here. So this is our supply line. As far as our demand goes, what we're seeing on the demand side is that even with a lower supply amount, which should increase the prices on homes, that they're actually standing still. People are getting asking price, and in some cases maybe a little bit under asking price, but in most cases I'm even seeing, to get the seller concessions they want, they're even offering over asking price. So that would put us at like an even basis. When we look at our demand line, let's put it right here. When you're looking at this graph, you have your price over here and you have your quantity. So right now, this is where we're standing right now on the market. And so what we have to evaluate is what do our indicators show us moving forward? So we know where interest rates are right now, right? Rates are high. This is what baffles me about the demand, is that the demand with a lower supply amount should be raising our purchase prices. But the rates are keeping them low. And so that is offsetting the low supply that we have. This low supply comes from a lot of reasons, primarily because we just haven't been building enough homes to keep up with a normal amount of homeowners that we have increase on a yearly basis. We have a shortage of supply and we have a demand that's tempered on interest rates. However, as far as interest rates and how we're projecting them, we're seeing inflation is going down. Rates follow inflation. So that means that's a big indicator that rates should go down. We're seeing job reports that are also not coming in great. So big indicators that I have as far as job reports are April 12th, and I'm really circling May 10th on my calendar because I'm curious to see what happens there. But in that time frame, if those indicators are showing more indicators for a recession, which is what they are doing, a recession actually brings rates down as well. So that means that moving forward, our rates are going to be going down. And when we have lower rates, that means more people can qualify and more people will want to jump into the housing market because they can buy more home and they can sell their home. What that's going to do is that's going to raise demand. So if we looked at on our graph and we move our demand line to where it goes, what you're going to see is in the future, as supply and demand increase, we're going to see this purchase price is going to go from where we're at right here to a normal place right here. So that's going to be a higher purchase price than what you would have paid right now. What you're going to find is that yes, these people are going to be jumping in because of the lower rates, but they're also going to be paying a higher purchase price. Right now, what I would do as a buyer is I would buy the home at this price. Then when the home increases in value right here, at this point, you would refinance and lower your rate. So then you can have the best of both worlds. You're gonna have the lowest purchase price and you also take advantage of the lower rates. So if I'm in the market to buy a home and I'm trying to figure out when would be the ideal time, let me ask you this. Do you wanna buy when everyone else is buying, or do you wanna buy ahead of that and then maybe even have the opportunity to sell when everyone else is buying? For those of you that aren't putting 20% down, if you take advantage of the market it is right now, and let's say you're putting 5 or 10% down, right? Let's say it's a $500,000 purchase price, just for ease of numbers. So you're gonna have a loan amount of $450, right? And what you have on there is a monthly amount tacked on your payment called PMI, which in this instance probably would be, let's say it's around $50 to $100 a month on your payment. Okay, depending on your credit, depending on the program that you choose. You have a loan of $450, the home is worth $500K right here, okay? When the market shifts with the lower rates and we see more buyers jump into the market, right? Your purchase price is gonna go up. So this is at 10% down. So let's say it hits that point and somewhere on this marker, Now your home is worth $550 or $600. At that point, what we can do is then we can then remove this monthly PMI with the refinance or without it, if you're in a good rate or not. And so then you're gonna take a lower monthly payment because of the interest rate, right? And then we're gonna take off the PMI, which doubles it. So instead of having to put more money down on your purchase, you can remove that PMI by jumping into the market at the right time, riding the wave of the increase in the purchase price. And at $550, if you take 20% of that, you would need to have a loan amount below, like let's say $440, which you could be right there. Let's say $600, okay? Now you're below the 80% loan to value marker. You take $120,000 off that leaves you with a loan amount of $480 is at 80%, okay? So in this instance, now we're gonna call your lender, which would be me, hopefully, or I'm gonna call you, but hopefully you're keeping an eye. I send a monthly valuator when you buy a home with me of where your home's value is at for this purpose, that we remove that PMI as quickly as we can. We look at the rates to see if we can lower that and save you $300 or $400 off your payment in the shortest period of time while not having to put 20% down on your home purchase. So this is a great way to take advantage of not using all your cash as your down payment, riding the market, and then removing the PMI with the increased value of your home. In the last month, we've seen rates rise a percent, which it was on a downward track. We hit a blip here because of some misinformation on seasonal jobs in the reports. If you are a buyer right now, you can jump in, you can probably negotiate a lower rate with the sellers, and then you can take advantage of the appreciation that we're gonna see as rates start to come down.